Okay, hello everyone. So 3rd of February, Monday, the second month of the Trader Discipline channel at the Global Trader Club. I hope you guys are using your journals to keep a track. You can also make your own journal. It's not a problem. The important thing is to make sure you're keeping a track so you can actually see where you need to improve day in and day out. Okay, so let's take a look. Now, I've already posted the swing days plus the hours and everything, like in the beginning of last month on the 5th of January or something like that anyway. So you've had them for a long time. So today, as you can see, I've already posted the hours here on the 15-minute chart. All right, Friday for gold was a swing day. So if you traded that, that would have been fine. And let's take a look. Because a new month. Before we go there, the first thing we should do, as you know, check the news. Now, as you can see, we've got a full Monty this week, right? Monday, Tuesday, Wednesday, Thursday, Friday. So we've got news coming up, and it's really going to psych the market up as we move from the manufacturing into the employment. Okay, so last week we had the interest rate and the Fed speech and so on, and this week we're going to have the some economic data revving us up to the most important volatility news, which is the non-farm payroll coming up on Friday. All right, so be mindful for that. Now today, as you can see, we've got 5:45 and 6. If you check your trading hours, your setup for this is going to be 5:05, isn't it? Right, so on Monday. And you can also see that we've got a 2:40, 3:30 my time. It's going to be New York pre-trading session. Okay. Now also there is a slot here which is 1 to 1:20 p.m. In fact, I'm going to put that in now. But the reason I didn't put it in initially, actually I won't put it in. Just make a mental note. From 1 to 1:20, what should really happen should be a continuation of the London pre-session, which is 9:50 to 10 o'clock my time, which you guys have here anyway, right? 9:50. All right, so around there, that should kind of like be a continuation. This is why I didn't mark that time period in, but if you took timing from me, you would put that into your radar. Now on the monthly, the support is 71, so note it down, 2,709, which is down here, and that is quite a fair bit down because we need to go pretty much all the way back down into there to go there on the monthly. All right, not a bad spot, not a bad zone. All right, if it comes down here, we're definitely buyers. All right, that's for sure. Let me just refresh the chart here, 15:30 back to 15, so we'll get the bars sorted out. And also let's check out our pivots as well. Okay, so here we are, right? So we've got room to go still. Okay, but there is room to come down here as well. So the market can go up and come back down again. Why? Because today is Monday. On gold, Monday is a swing day. And if you recall, Friday was a swing day. So two things can happen here. Friday was a swing day and Monday can continue to be a swing day. All right. So where can that continue from? So we can go up into the previous day low, which is there, and bounce off from there. As you can see, the market broke out from there. So the market goes up there. There's a possibility to sell down. Be careful for the weekly pivot, but your targeting should be there and there. So that's trade management, okay, or cover. Then push down. If it goes down, great. The second option is all the way back up here. Now remember, with gold, let's take a look at the weekly as well. With gold, the trend is up. Okay, so we've got a diversion here. Diversion. We have a diversion here. All right, so that is their divergence. All right, on the weekly, slightly higher, but the market closed higher. All right, so if you take a look at this, okay, here, right now the high of the 27th, all right, or this bar here, 26th, is 27, 2,790. That's the high that it made. And if we come to here, you can see that the closing of this bar is 2,798. So it closed above, right? So this is clearly bullish, right? And wanting to come down and retrace is good. That's what we'd like to see. And that's, a good opportunity to get back in as a buyer again. Where can we do that? Well, on the monthly, I've given you the level there. On the weekly, we've got what, 60, 60, it's 2,751, okay, 2,737, 2,751 is there, okay. I've made that a little lower. Let's put 2,751. Why? Because there's a bit of a gap there. So that $2 gap, market may want to fill, but here we should be in the game if the market comes down here. So we want to be in the game there. And this 2,000, let's do this. One more place to look at is that blue line, 2,717 there. Worst case scenario is 2,665.70, which is all the way down there. Okay, but the monthly is before that. So, if we're going to go down 2,710, 2,700 is probably going to be the zone. Okay, but we'll cross that bridge when we come to it. Okay, as you can see, this is a pretty big leap. You see, this is a big push up, and the market has done no pullbacks at all. All right, so, a bit of a pullback would be nice, but I don't see how we're going back into this zone given the current global situation. Okay, so when the market does pull back into decent places, we'll go long. If the market feels like it's going to sell off, we'll cross that bridge when we come to it, when we start breaking lows, closing under them, and selling on a swing day, then we can. Now on the daily, 59, 2765. 2765 here, all right, is on the daily. So that 2765, the reason we've got the 62 is because of the gap. So this zone is also going to be a buy zone for us, okay. But we're in a new week, okay. So just be mindful that the market should find a place to reverse later in the evening. So until the evening, until the closing, if the market decides to sell, our direction should be towards the downside, because the target is at 10:15, 10:30 in the evening my time. It's going to come up to about 11, and then around there we can think about buying as well. Okay, so selling, I think, is the better way to go. You can also look for a buy setup on Tuesday if the market closes down. All right, so that's there, that opportunity. So let's take a look at the euro-dollar monthly. Now on the monthly, this is great news for us. Remember, we're waiting for the market to pull back down and to go back up again. Now there are levels here which we talked about them before. So 1.026343, 1.0140, they're all here. Oops, not there, but here on the 15-minute. Okay, so we're all down here. Remember, we had this level and the market did it, so it's all good. These levels are all done, nice and easy. So I want to push back down a little bit more. We've got a level at 1.018. Now be mindful, today is not a swing day for the euro dollar. All right, so there's a big gap down. Market wanting to push down is, fine. We don't mind, okay, because we're expecting these levels. Remember, I said we should definitely pull back into this red bar, and the other option was we could have a double bottom or a stop sweep or a slightly lower with divergence to go back up. All right, so those options are on the cards, and when they happen, we definitely want to be in the game, and we want to be buyers under those circumstances. Okay, so now I'm going to get rid of this because that's done and the market's sold there and we're all happy chappies about it. Now we can also get rid of this because this is all done. We've broken below and we've come back. So this is exactly the kind of stuff we're learning in technical analysis. We want the market to pull back down, and it's right on the goodbye kiss off the waves down. All right, so we're looking to go long on this. 31.29 there, take a look. 31.29, 1.0220, 1.0188. Okay, 1.0188. 1.0188 is around here. So here we are. Okay, nice and easy. So we still have a bit of room to go down. I suggest we wait for tomorrow on this one. If it goes up and sells again, it shouldn't surprise us. There's a gap here. I rather just see it sizzle down before we go up, and then take it from there. All right. So that's basically it. On the weekly, we took a look here. Pretty much the goodbye kiss is going to be 34, 1.0250. 1.02, that can't be right. Weekly, let's take a look again. 34, 1.0250. Oh, because yes, sorry. Okay, why? Because I can't see the bar because of the gap. Remember, it opened here. This is, okay, it's just my silly me. All right, the market's down here. Okay, it's not a bad place to be buying at all. Okay, and on a swing day, I think we can do that. Maybe the market might just touch these zones, but I'm all happy to look for buy setups on the euro dollar, and that is there. Okay, so it's not this bar, sorry, my fault. It's right here on the goodbye kiss, and on a swing day, which is going to be tomorrow, I don't mind looking for retracement buy levels or buy levels at these levels we've ascertained on a swing hour. Okay, not a problem at all. In London, if you want to buy in the London session and push up, I can't blame you, because this is right at the goodbye kiss on the PST, and I'm okay to go long. Okay, do it with a smaller lot size if you don't want to take the risk on, because it's not a swing day. Let's take a look at SB 500. SB 500 here is that one there. Okay, so we've got room to come into 63, 2753. So it's a fair bit down to 753. Okay, it doesn't mean we won't get there. Okay, you can see the market came really down. Okay, 2753 is there on the monthly. All right, I'll do it. I'll make it 2750 because a nice round 5750 because a nice round number. But you can see that we've fallen pretty much, 100 points there. Okay, 6,120 to 5,900 pretty much 20. Okay, so it's pretty much doable overnight, as you can see. Okay, so this also, just want to note, it's not a swing day. Your swing days are up there, so check them out. If the market does come down into that monthly zone, the market wanting to go back up again is logical. It's still in an upwards trend. On the weekly, we've got 49, 5,850, which is also good. 5,850, 5,850 is down here. 5,850. Okay. $5,850. So it can still come down a little bit more, and there's room to come down, in my opinion. If it goes back up to sell again, into a swing day, it's logical. If you want to take that avenue, you can. That should be, that should figure out, okay, we should begin to see if that's going to happen. UK pre-trading session. Okay, so we'll see how that pans out. But as you can see, this is a nice fall, is a big gap, and market will want to fill it in, and which is fine, not a problem. Hopefully it'll come down to fill it in. Okay, you have to look out for this level here. This is the 31st, and that closed at, or the lower that is what, 5959. 5959 is there. So you have to look out for this level here. All right. This will be the first target if it wants to get anywhere. 5959. And then, we'll cross that bridge when we come to it. Let's just check this out here. Yeah, as you can see, the bar just opened directly here. Okay, you can see that's the closing, the purple line. Okay, and this is the opening here. All right, so if the market does want to go up a little bit, it's doable. Okay, it's not a swing day. Hopefully on the swing day we should be down, and then we can follow the trend back up. But if it goes up, we'll be sellers again. Friday was a swing day, as you know. I did say you can sell from the highs if you want. I don't trade on Fridays, but it's doable, and that's what the market did. Let's take a look at Dow Jones. Now, obviously, with all the indices, I suspect, including the Bitcoin as well, they must all be down since everything opened down. Looks like everyone's going for cash. But we'll see how things pan out. If everything is falling, it's going to be a problem, isn't it? Everything is falling. All right. Now look, here we have a gap here. All right, a gap here, as you can see. So what we can see, a big fall. It's just like with Dow Jones. Remember I said this is a sell zone. It's sellable, and bang. Okay, so it's all good. This is not your case here. Okay, now with the Dow Jones too, okay, if I do this, Dow Jones, we had what indices Thursday, Friday, didn't we? So Thursday, that's your Thursday, that's your Friday. Beautiful. All right, so you can see. There you go. All right, nice fall. Thursday, Friday, doing a big swing, coming down. I did say we need to come back down. You see the closing range here. So finding ourselves back along here is, is the nice thing that can happen to us. Let's take a look at the monthly. All right, so the first support for the month is going to be 62. So we've got to be careful here. 43,186. So 43,186. That's on the monthly. 43,186. All right, there. On the weekly, okay, on the weekly, resistance there, 44 there, 41,731. 41,731 is way down. We'll cross that bridge if we break this. It's just way down. On the daily, there's nothing here on the daily. If you're using your PST, draw your lines. Okay. So this is the lines here. All right. So the market does have room to come down. If we go up, 44,450 is your good buy kiss. You can also do one like this. Okay, and that could also be your good buy kiss line here. Okay, if we do that. All right, so just be mindful that we've got to be at room to come down. 4,450 is going to be just above 44,450. It's going to be just there, which is nice because it's just pretty much under the closing price there. Okay, so it's in this zone. This is a good zone for the market to sell if it goes back up before coming down. All right, so the swing day, also the swing day for Dow Jones is not today. All right, not today. If you want to just let it go, you can. If you want to be, if you want to take a look at London and you want to buy this low here, okay, because this is looks like that's what the market is doing, okay, buying, you can, all right, but just understand, let's get rid of this, just understand that there's a bit of room to come down and it's not a swing day. All right, so we have to see how things pan out with this one. All right, Friday and today is not a swing day, so the market can push up into the next swing day or come down into the next swing day, so be careful with the indices. Let's take a look at NASDAQ. Now, NASDAQ, here we go. Now, same kind of thing with NASDAQ, place where the market bought before. We'll see how that goes. Let's take a look at the monthly. We're right at the tops there, as you can see. I did say that was a bearish thing, and the market, like last month, made that high without, and then retraced a little bit more because we are at the highs on the PST. So we have to check it out here. US Tech Weekly. Now, weekly, we're right on there. This is critical because 51 is 20,813 weekly PST. 2813, 20,813 is pretty much there. All right, so that's the zone there. And this is pretty much where we're at now. Okay, so this is a weekly PST level. So it's bound to have some significance. But if this thing breaks, we've got room to come down into 2297, 20,297, 20,000. $297. Okay, that's basically it. All right, so as you can see, there's a huge gap there. So if the market comes down, there'll be a rush up again. Okay, so for us, the better thing is for the market to come down. Oh, this is nicely on the daily PST, 238, 2794, 20,794. Now, this is important because if this place breaks, it's going to be significant. All right, if this breaks, the market stays below, it will be significant. Okay, so buying here is also okay with a tight stop loss. You can chuck a UE, or you can wait for the swing days, because if this thing breaks and then keeps pushing down into a swing day, then obviously it's going to be a bit dramatic, isn't it? Yeah, it's going to be dramatic. Okay, so it might be in that downwards motion. Okay, remember there's a big gap here. It doesn't have to close it immediately. It can, or it can like go down and then we can just go up again. Okay, so it doesn't have to do it immediately, but this is like tricky, as you can see. All right, let's take a look at Bitcoin. Now with Bitcoin as well, it should be down, I guess. I'd be surprised if it wasn't. There we go. Bitcoin exactly where we drew our line, and picking up from there, it's nice and easy. Okay, now with Bitcoin as well, guys. Oh my God, I forgot to put the Bitcoin swing days there. Got to add that in. All right, my apologies. I added it on the Dow Jones right now. All right. Now with Bitcoin, it's a little tricky. Okay, because it could be like a muck around here and then turn around. Okay, just like with the SP 500 side note that I did in brackets. Okay, with the SP 500, I made a note there, so be careful. So we could be having the same kind of stuff here, so we need to be careful here. All right. Once again, on the daily, you can see there's a big jump there. It's a big gap. If we open up the 15-minute chart, you can see this thing is trading 24 hours. You see how volatile it is here. Okay, and basically that's it. So what to do with the Bitcoin as well on the monthly? Well, on the monthly, we've got room to come down. Okay, we do. On the weekly, oh, it's broken down. So don't stand in front of it. You want to, I guess you want to be selling this into at least 87,700. So let's put a target 87,700. $700 there. Okay. 87,700. Slightly lower. But this is it. This is the zone. And even if we keep pushing, we have to be careful. All right, this is tricky, as you can see. Also, if I go to the daily, all right, this is looking like it's a sideways market, right? I did say before, I do recall, it could turn into a distribution and turn sideways. Okay, I did say you can buy along the line before, but Saturday was a swing day. You can see Saturday just turned out to be a breakout day, so we can now get rid of this. It's all good. Saturday just pushed it down, and I drew this line here before saying this is a sideways market. So if the market comes down, we'll want to be buying the lows. Now here, buying the lows are okay, but remember we've got 3 days to keep in mind here, and that could turn out to be a UE expended over 3 days, or it could be pushy. Okay, and then if it gets pushy, if it comes to pushy mode, you can see where we can come down to. All right, all the way down there. Now, as you can see, in a matter of 4 days, we're back. We're from 106 to 100. Well, from 106,000, we're down to 93. Okay, so that's quite volatile, and it's a big move, as you can see. So, what to do here? Well, look. Let's look. The market in this bar has bought numerous times. This has been pretty much, it's been taken out on numerous occasions. Once, twice, 3 times, 4 times, 5 times. Now we're in it a 6th time. Let's get rid of that. Okay. Now we're in there a 6th time. So as you can see, a lot of buyers probably are dried out. Okay. Who else is going to buy here? The only ones who can buy here are those who are still, who are fresh in the market. Like they're not holding on to their positions that, they bought when it was here. So this is why I always say when we're at the highs, we're going sideways, sell the market. If you're at the lows, buy. Why? Because if you buy here and we get stopped out, you're not going to lose much. But if you start buying up here and holding it, not day trading, but holding it, you're just going to get messed up. Okay, so this zone, if it breaks, and it has a possibility, a high probability in my eyes, because this is how it is, all right, then this could come all the way, as you can see, into the 80s, filling in gaps. We could find ourselves back down here. You might be saying, but Marty, that is so low. I know, but the market does that kind of stuff. It's done it before. So even if it hadn't done it before, look, even if it hadn't done so before, okay, it still can. The market can do anything. And because we're short-term traders, you don't want to be hanging on a hope, but you want to follow the trades nice and tightly, okay? So if the market, breaks down, which it can, then, we've got room to go down. If we end up somewhere high on those swing days, the market may want to sell, and selling is okay on the good buy kiss, on the mid zones, okay? Measure your Fibonacci's from top to bottom, and your mid zone where you fill in the gap, or the good buy kiss here on the daily, is 43,98,882. On the weekly, we're just breaking through. That critical level is 94,504. So 94,500, 94,500 is already a goner. Okay, this is 94,500 there. All right, so that was a critical level, and then that's it. So we have to be careful in this zone. They just broke straight through it. Okay, if the market stays below this, it'll be bearish. Okay, no gaps here. As you can see, they've closed the gap. No gap, no gap, no gap. It's clean, just up here, and that's not a huge gap, as you can see. It's not like the indices. All right, so be mindful if you're trading it, because of the PST breakdown, and because we have a few days the market can swing at, you're going to have to be careful. You want to also, on your weekly, do this. There, and this thing is like okay to break as well. You can see we followed this all the way from there, remember? Right there. And that's where we're at. So the market, wanting to push lower, close all these gaps, come back into there is logical. Hope that helps. Have a good one, and good luck in the second month of the Trading Trader Challenge. If you have any queries also, guys, shoot them through. I'm more than happy to help if you have any queries anytime.